The economy of the Kingdom of Swaziland is facing substantial fiscal challenges. At current trends, the country's central government deficit is expected to reach a staggering 16% of gross domestic product during the fiscal year of 2010-2011, which more than doubles the country's fiscal deficit when compared to that of the last fiscal year, which stood at 7.1%. These were revelations made by the International Monetary Fund mission currently in the country during a press conference held at the Ministry of Finance earlier today.
The IMF mission arrived in the country early this month to hold bilateral meetings with the country's government to look at ways of addressing the country's fiscal challenges. The mission says the widening fiscal deficit is driven mainly by the large shortfall in revenue transfers from the Southern African Customs Union SACU, as well as government's decision to grant a 4.5% wage hike for politicians and civil servants early this year. This, they say, has resulted in Swaziland having the highest wage bill compared to GDP in sub-Saharan Africa. They say this situation will also have a bearing on the external current account deficit of the country.
Correspondingly, the external current account deficit is expected to widen to 18.5% of GDP in 2010, which is draining the gross international reserves of the Central Bank of Swaziland.
The mission says a radical reform in the manner with which government funds are handled will be needed for there to be a turnaround in the current situation. The Kingdom of Swaziland has already started taking the necessary actions to rectify and mitigate the situation. The Kingdom has already put together a fiscal adjustment roadmap, FAR, aimed at addressing the country's troubling fiscal challenges. The FAR is looking at putting in place measures which will increase government revenue through improved tax administration and tax policy changes, cutting down on non-priority expenditure and cutting down on government's wage bill by offering an enhanced exit package to get 7,000 civil servants retrenched on a voluntary basis. The International Monetary Fund mission says it is happy with government's commitment towards addressing her fiscal challenges.
We are happy about the level of commitment at the highest level. In fact, as I said in the cabinet meeting, the Prime Minister himself gave strong commitment on behalf of the government. Now, we will now need to see in what the details of the government's decisions will be over the next few weeks. But I feel confident that with strong political will, this difficult situation the country faces, the government will be able to resolve it and move forward.
The mission has left this country for Washington, where the IMF is based. They will continue to monitor the country's situation and provide technical assistance for the next 6 months, and will return in the country in February next year. Reporting for Swazi TV News, Mbabane.